tell us about Jack, the broker, the person?
Been in the industry now for, 8 or 9 years. It's gone pretty quickly. As you said, lived overseas for a couple of years. Really loved my time over there. Went over there with my wife and travelled around a lot, and was very fortunate to, do this exact same job overseas, and taught me a lot, which was really good.
And what did it teach you?
Patience. Taught me a lot, I guess, just travelling and seeing other cultures and how other people live. Slow down a bit, nothing's that important, I guess. It can feel that way in our jobs, especially with the time pressures and all that. But definitely opened my eyes a lot.
That would be it's a bit of a dream for most people. Go overseas, work, learn, travel, the whole lot. As a broker, and that time of, I suppose, that era where a lot of Aussies were going overseas for a bit of a gap year, working, finding a trade, probably a little bit different now, but can you just describe what that time was like, where a lot of Australians are doing the same thing, and how did you find, being able to work?
I think a lot of it was to do with the time zone as well. So sort of waking up at 6 or 7 a.m. London time, that was usually 5, 6, 7 p.m. back home in Melbourne. Most of my business is Melbourne. That made it a lot easier. I guess from all the Aussies going over, anyone that's sort of been over there, it's a huge expat community, and that just made finding friends and stuff like that a lot easier. And we travelled with them, and from a business perspective, it held pretty steady. The thing is, though, it coincided directly with interest rate increases. So the month we got there was the first interest rate increase. And then they just went up and up and up. So the market cooled, but also the business obviously slowed down a little bit purely from interest rate rises, and I guess just not being in front of referral partners as much. The business definitely started to flatline, and it's taken a bit to pick back up, if I'm being honest.
Given that you were amongst the expat community, did that naturally just mean that you were writing a lot of finance for your expat community and clients? Yeah,
definitely. I think I ended up doing 2 or 3 of my friends' loans whilst over there, and they were sort of living in London and trying to buy investment properties. A lot of them were from Perth, so they got on the ground floor, sort of, so to speak, 2022, start of 2023. And that really taught me, I guess, how to sort of do the expat lending and which banks to use and who not to use. And then from there, it's sort of grown. I know you've sort of sent through a few clients and other people. Once you sort of get that, I guess, not name for yourself, but people can lean on you a bit. And then just word of mouth. There's a lot of people that know a lot of people that live overseas, and Australia has always been such a good investment opportunity, I guess. And some countries people are trying to get money out of, and some people just want to invest for their kids in the future. And just sort of learning the ropes on the whole expat lending made a big difference.
Yeah, and with that, like, not a lot of people aren't good at asking for help in general, but even when you are in a different location, different country, different language, different currency, it makes it all that harder, especially if you've got some ambitions to repatriate back home. What were some of the learnings you had around expat finance, or what it means to be an expat to get funding to then buy Australian real estate? Maybe some misconceptions around it.
Common misconceptions, honestly, I think is it's not that difficult. For instance, there's gold and silver currencies, which most brokers will know. And basically, if you've got a gold currency and you're on pay slips, CBA will almost just treat you like you're living and working in Melbourne and buying in Melbourne. Right. With regards to LVRs, the borrowing power, the biggest hurdle though is borrowing power. They're quite conservative, the banks. They'll shade you down, and then obviously the Australian exchange rate isn't great at the best of times, so that definitely hurts. And then there's further buffers.
So the shadings on that point, there's extra shade. They're monitoring the exchange rate because they have to, but are they applying further shading because by function they're earning a different income in a different country?
Yep. So it's just sort of a conservative approach on the bank's behalf. So your gold currencies like the US dollar, they're shading that down by 20%.
Yeah, wow.
Yeah.
Interesting. Yeah, wow. Okay.
Yeah. Misconceptions is it's not that difficult, but from the bank's perspective, the second and third tier lenders that do it, they will want a larger deposit. So if you're self-employed living overseas, people always thought you simply couldn't get finance to buy in Australia, but that's just not true. There are 2 or 3 banks that will do it, but they do need a healthy deposit, and the rate isn't great, as you can imagine, but it is definitely doable. So a lot of people might start up their own business overseas if they've been over there for a long time, or a lot of people freelance or contract, for instance, in the UK or the US. So are they technically on pay slips or self-employed? And another sort of really difficult issue is reading overseas tax returns. It's a bit of a nightmare.
Did you ever have to convert currency, or or convert multiple currencies in order just to lodge a deal? And how hard is that, or simple is that?
Only once. Tried to once, and it simply didn't work, so I didn't have to go too far into it. But the only other one was an Australian citizen who was working in London and Singapore, but getting paid in US dollars, but would then funnel it through bank accounts in the UK and Singapore, and then wanted to buy in Melbourne or Sydney.
Yep.
So just finding out exactly where to shade and how much and stuff like that. But he wasn't trying to borrow too much. But yeah, it was a good learning curve. Yeah.
Which lender?
We ended up going with MA Money.
MA Money,
Yeah,
righto. Yeah. There you go. Plug for MA Money. Lovely. And so you've come back, and you've come back virtually during the rate increasing cycle, almost where it peaked. Then, the downward turn, and then we're seemingly back to the rate increasing cycle. So you've seen a bit since you come back onshore. What's it been like? How have you found it, as your own business owner coming back to grow your business and brand locally, and then all in that, what are you seeing in the market with your clients?
Yeah, all the rate rises occurred whilst I was over there, I believe. I don't think there were many once I got back, and then they slowly started to come down. God, time's flying. I think towards the end of 2024. Business was slow. It still sort of is for me personally. The team here at Razor are flying along, but me personally, it has taken a while to get back into it. But I have seen the cycle of rates going down and up, and obviously the biggest thing you notice is borrowing power. How much people can borrow is just so directly linked, I guess, to how much buoyancy and excitement there is in the market.
Like sentiment and...
Yeah. And as soon as there's a rate, I always say, once there's a rate decrease or two and a positive Herald Sun or realestate.com article, and then people start talking about it around the family barbecue, I think the market does kick off pretty quickly. And we are sort of seeing that, in Melbourne. The numbers might not be wholeheartedly backing it up, but there's definitely also with the government 5% scheme. I deal mainly with first home buyers, obviously the expat lending as well, but I would have to be 90% of my clients are first home buyers. So that's where the government scheme coming in October, a few months early, that's where my big uptick has been. But also just being back in front of clients, being able to call them a lot more, because as I said, sort of due to the time zone difference, it was great for that initial chat, but trying to call them quite a few times and build that real strong relationship, that was nigh on impossible. So
yeah, nice. And then you've naturally, as a family, you and your partner coming back to Australia, then you've got your business, but then trying to find your own property. So what was your property buying experience when you came back to Australia? Yes,
great segue. That is how Tom and I met. So we were discussing with sort of buyers advocates when we were over in London, actually, because a friend of mine personally used one out in Perth, and he had a great experience, and I think he bought that place for about 650, and I think it's being valued 3 years later at about 1.1.
Unreal.
So I start to, you believe it, you really do believe in the whole system. And just through where my wife and I decided we wanted to live, based on where the office is here and where my wife works, etc., and where our family is, the original buyer's advocate we were talking with, he was fantastic, can't fault him, but he doesn't really service the area that we were looking in. So then I came back in the office, and a few of the boys said, why don't you chat to Tom? I didn't even know who Tom was. I hadn't met you at all, gave you a call. You put me, in touch with Tristan from Tommy Advocacy, and he was fantastic. Yeah, you should really be interviewing my wife, because she's just the biggest advocate for advocates, I think, because they take the emotion out of it. And I guess being in this industry, you sort of become a bit numb to it and all the real estate agent tactics and finding off markets and all that. But we had an incredible experience. I can't speak highly enough.
Yeah, good on you. It was a real privilege to sort of watch that all unfold. And then seeing the relationship you as a broker have formed with Tristan in the background.
Yeah, yep. So try and send as many clients as I can, I guess, through Tommy and Tristan and yourself and ALBA, just based on where they're looking to buy, I guess. Build a great working relationship.
Yeah, good. And an investor, like, it's quite unemotional, as we know, investment PPR. And there's, again, a misconception that you only use a buyer's advocate for investment purposes. But depending on your circumstance, and you're a prime example of that, whereby it's solved a problem for you buying your primary place of residence. Can you kind of break down, what a person would feel by outsourcing this type of work and paying for it to a property expert who's buying you a place that you are ultimately going to live in for the foreseeable future?
Yeah, when I think of a buyer's advocate, I definitely think PPR or owner-occupied, because you're going to live there. It's so much more important that you get the right property. And I guess besides the day you move into your new property as a family or on your own, not much else of the process is very nice. The banks can be horrible, especially if you're not going through the right broker, for example, trying to find a property, and then you find a property, you fall in love, but that day 10 other groups have gone through, or 20 or 30, and then if you do love it and you do get to that next step, you then button heads with a real estate agent that some might not respond, for example. So that's where I wholeheartedly believe in the whole buyer's advocacy side of things, because the off markets, the early access, them taking the emotion out. And I always say to my clients that buyer's advocates really enjoy punching on with real estate agents. And it's a healthy relationship. But yeah, I definitely think that PPRs, owner occupied places and buyer's advocates go hand in hand.
Did you go to auction in your circumstance?
No.
So yours was off market?
Yes.
Yeah, right.
Yep. So we had a really good experience in that. So basically, Tristan called around, found all these off markets. Within about 2 days, we didn't know how quick it would move. That's probably the only downside of how quick it does move. So you do need to be ready.
It does move quick, right? It's quite unexpected and can throw you a bit.
Yeah. Georgia and I were just sitting there, and we're sort of really early days because we had a place. We weren't in a mad rush to move. Yeah. And then I literally think we spoke to Tristan on the Friday, and by the Monday, Tuesday, there was 5 properties in our inbox that were off market. That is basically like, are you keen? I can walk through. So you really do move quick. But our personal experience was basically Tristan called around. He knew this was going onto the market. He knew it ticked all of our boxes because we gave him a pretty specific brief, knowing this would be the family home. We want to raise a family there. And he got us 2 private opens before it hit the market.
Wow.
And then he did a video tour. We got a building and pest. But the vendor at the time, they really wanted to have 2 public open homes.
Yep.
That was their hard and fast rule. And then they were going to see what happens and stuff like that. And there were good numbers through the property, but we had all of our ducks in a row purely from using an advocate that I think the open was 12 till 12:30, for example. At 12:31, Tristan went in, unconditional offer, really good settlement terms. He knew where we needed to offer because he'd been hounding the agent. Yeah. And another thing he did is he basically said this offer is valid until 5 p.m. tomorrow. Yeah, so the agent, the vendor, they really had... Yeah, they got a bit of a cat on a hot tin roof, and they accepted the offer, and I think we definitely paid unders. But yeah, that whole process of they're taking speaking from someone that has dealt with so many clients buying houses, they took all of the worst parts out of it.
Yeah, right.
Yeah.
And you'd think that there are things you just can't foresee. Like if that scenario where you just explained, you walked in 12:30 to 1. Tristan's gone in with not just an offer at 1, but like he's put terms around how long the offer is valid for, noting what's ahead. That's credibility, it's forward thinking, it's been proactive, it's taking control of a situation that, let's face it, most buyers don't have any control when they're dealing directly with the selling agent, let alone the vendor. That's been mitigated the whole way through in your circumstance. Yeah, definitely. Yep. As I said, they just took all of the horrible parts out, and I really rate that offer's valid until 5 p.m. tomorrow. Yeah. You've got to have you got to have something behind you to do it, because you could probably lose a property. But in this instance, it definitely worked. Yeah, totally. And like on that point, like there is an unhealthy but yet healthy relationship with selling agents and buyers agents, because as you know, like from a broker point of view, you have a motivated buyer who's pre-approved, tick. So the selling agent's willing to chat. For that client to engage a buyer's agent that's seen by the selling agent also then shows to them you've got a motivated buyer. They know that they've got someone representing them, got money, they're pre-approved, tick. So they're more willing to actually work with them because they can get a deal done. It's best interest for the selling agent, buyer's agent's ready to go. Like, it is a healthy yet unhealthy relationship there.
Yeah, definitely. Yeah, I guess it just strengthens the offer, because I'd say most people that do deal with a buyer's advocate, they usually are pre-approved. You want to make sure you've got all your ducks in a row. So the offer is unconditional. It's at the right end. It's not offensive. It's not below the range. It's not at the bottom end of the range. You're not wasting anyone's time. They know what you need to offer. And it's the best possible offer, I guess. So yeah, as a selling agent, I'm not a real estate agent, but I imagine if you do receive an offer like that through a buyer's advocate, you go, okay, it's pretty serious, and it's probably also a true reflection of where the market's at, because you buyer's advocates you're in the market every day on the phone, working the phone. So it's probably a fair market value as well.
Yeah, totally. So then on that point, and probably we often hear about first home buyers and their poor experiences at auction or dealing with selling agents, and that seems to be your niche at the moment. What are your clients seeing? What are you seeing with your clients who are either looking for property, going for auctions? That my view is, yes, heaps of schemes are great, but we still have a stock and supply issue. And when you've got that fundamental reality, prices only go one way, and we still kind of have the same problem. So, what are you seeing with your clients in that market? The rate increasing cycle. Insights would be good.
A lot of first home buyers, definitely since the scheme. I'm finding I have to do maybe a bit more educational sort of work, because during the flat market, a lot of people were offering in the middle of the range and they could confidently, then negotiate from there. But let's say properties now is listed from 560 to 600, for example. I've got clients just going in at 560, and I'm sort of having to say that's not the case anymore.
Yeah.
So just that education piece. There's definitely a lack of stock. There's definitely a lot of buyers out there.
Yeah.
And that's where obviously I do try and push isn't the right word, but my general rule of thumb is after 2 or 3 properties clients miss out on, I then try and introduce the conversation strongly around a buyer's advocate. But as we've sort of spoken about, with the 5% deposit, there is a cost with buyer's advocates. They're worth every cent, but some people just might not have the money. They'd love to buy one. So I know you've sort of worked with me with some first home buyer specialties with other buyer's advocates and stuff like that. So that definitely makes a big difference.
Yeah, but it's just hard. Like $5,000, let alone 18 grand, it's a lot of money for a lot of people. But with that opportunity cost calculator we have, it's a good reminder that the markets are moving just so fast at the moment that through one lens you can see it as a cost, totally get it, and it's the security you either need to commit to that property, or let alone just have cash in the bank so you're comfortable, or you can invest that money in a service where you get a result that you sort of have experienced, and you mitigate your risk and you increase the likelihood of getting the opportunity. But people don't see it that way. People will see it as the cost, as opposed to I'm going to get a return in this service.
Yeah, definitely. Yeah, I sort of always say you should definitely save on the property what you're spending on an advocate, and plus you've got to deduct if you're renting, and rent is exorbitant at the moment. So if you're spending $3,500-4,500 on rent, are you going to go rent for the next 4 months because you're missing out and you're offering at the lower end of the range? Well, guess what? 4 months of rent in your current situation is what the buyer's advocate is going to charge.
Well, I saw a CoreLogic report before about rents. Rent prices are growing 3 times the rate of wages.
Yep.
It's just
it makes sense. Yeah, there's a few guys in the office at the moment looking at rentals, and they're shocked at how much it's going up. But I guess that is a direct result of a lot of investors selling off their properties due to the land tax and the costs.
Yeah. Do you have a view like everyone? We're in property and finance. We're all interested in property. Like, market's going one way. You hear that's that. Like, feels like there's a bubble moment happening, or we are in a property bubble ourselves in Melbourne. But like, you got any Jack's views on property?
As I say around the office, everyone's entitled to my opinion. I that is one thing that it did actually teach me overseas a little bit is Australia is so unique just due to how far away our cities are from each other.
Sure.
So this whole increasing interest rates for the whole of Australia to cool a market that it might be very hot in Brisbane and Perth. Sydney's always going to be at a high, but Melbourne is still back. We're still so far back from where we, I guess, organically would have been if COVID hadn't have happened. I don't sort of delve too deep into the data, but I don't know. I went to a presentation with the owner of Razor, Toby, about 10 years ago, and he brought up a Herald Sun articles and the Age articles. I think he honestly went back to like 1952 of how property market is going to crash. It's going to crash. It's going to crash. We're 10 years down the track, and I've probably seen 500 articles since then saying the exact same thing. It's supply, it's demand.
Yep.
There's fresh money coming into Australia by way of immigration plus overseas spending. I don't know. I just think an asset is sort of worth what it's worth.
Yeah.
And yep.
Yeah, no, it's always complex, but it can't be it has to be as simple as that. Like in any market, if there's a lot of demand but less of the supply, it just means that it's only going one way. And whilst we have more people coming into the country, we've got we've got different ways people can get access to that asset, and the government's continuing to pump money into try and build more properties, but that's lagging behind. It just comes down to, like you said, like demand supply.
Yeah, absolutely. And with the whole cost of living and property prices, we've got a long way to go. If you sort of look at New York and London, and people say it can't get much worse, I have a feeling in London it's at about 60% of take-home pay is spent on rent.
On rent.
Yeah.
Right.
Let alone a mortgage. No one has a mortgage.
Yeah.
No one can afford a house. So that's the scary part.
Yep.
But yeah, there's always going to be buyers, and there is money out there. I also think the older generations are going to pass down a lot of wealth. So everyone that bought a house for $200,000, and everyone's mum and dad bought for $100,000 to $300,000, they're now worth $1 million to $3 million.
Yeah.
That wealth has to get passed down.
Correct.
Over the next 20 to 30 years. Does that just keep house prices where they are?
Yeah.
Let's say a house does go down 20%. There's going to be buyers everywhere because there's going to be money, and money passed through the generation. So maybe in 60 years it does completely fall out. I don't know.
Yeah, no, we had this conversation on Friday at a lunch we had, and we had a gentleman from one of Australia's largest private lenders talking about private credit and private capital, and touched on the intergenerational transfer of wealth that's going to happen, and naturally, like, that is where the investment side of things and what people have access to comes into it. And then, on that point, we've just had a client profile referred through. The client's sitting on a property, bought in Sydney, bought it for $600,000, now worth $1 million. Take home pay with his wife, circa $20,000. They've got $30,000 in redraw. They've got $400,000 in savings, and repayments right now like $2,000 a month. And it's absolutely a viable option to be buying an investment property or upsizing. But they're a young family, 2 kids, and they just are observing that extra commitment as an extra commitment. And they could spend $700,000 worst case on another property and increase repayments to an extra $3,000 a month, or $5,000 a month. But they'd still have a healthy surplus at the end of it. But they see that side of things as it's another commitment. Do I really want that, given cost of living and being quite conservative? And I think that's a good example of potential intergenerational wealth transfer. People have worked so hard to create it, but then the thought of maybe continuing to invest it, given their family dynamic or risk profile, it's just none of it. And I'm not sure if that's an Australian cultural thing, or if that's just symbolic of time, but whatever that transitionary period is and whatever that number quantifies to, it's going to be quite large.
Definitely. Yeah, it'll be massive. I mean, just looking at my sort of friends and family, we're all pretty middle class, public school out in the suburbs, out Bayswater way. And if you add up sort of grandparents' asset value and then our parents' asset values, and if that was to get passed down, you're talking a lot of money, and that's not That's not wealthy areas. Or investment properties. So I think there's going to be a lot of money changing hands, which Australians are obsessed with property. I guess it's an economy built on holes in the ground and homes. And if we've got money to play with and we love having our own slice of land, I can't see why there would be a bubble. But again, don't quote me.
I still can't get over the fact that people still want to buy investment properties down the street. Like, if you're going to do that, you may as well just live in it. Like, are you seeing that, like, with your, I mean, if you have investors, like, are they so wedded to buying an investment property locally or in their state because, safety, or they just like the idea that they can drive past it?
Yeah, as I sort of touched on, most of my clients are first home buyers, PPR, but definitely with investors, the drive past factor is massive. I think they might hear horror stories, so they do want to invest in the local area or somewhere they know. If you asked me to tell you a good suburb of Brisbane, I couldn't. You could tell me any suburb and I wouldn't know what you're talking about. So, but that's where I trust your good self. If I do refer clients that looking for investment properties, it's just all that data-driven sort of stuff on where to invest. Yeah. But I personally think Melbourne would be a half decent place to invest at the moment because it is so far behind the 8 ball for long-term strategic growth.
Yeah, definitely long-term. Like I keep harping on. I've been quoted as the Melbourne hater. But my point is, I just think it's a fantastic time to be buying your PPR. If you can get in, fantastic. But I just think there are better markets, personally, for investment. But it's all within your ideal risk profile. A couple more questions. Broking, technology, AI. There's a whole lot of conversation, dialogue. From a broker's perspective, how are you feeling about it? What are you seeing? What are you thinking? What role do you think that will play in your capacity next 2 to 3 years? Yeah,
it depends what day you ask me, to be honest. I was quite scared early. We were talking in the office about jobs we do if we weren't brokers. But then we had the CEO and founder of Loan Market in here, Sam White. He came in and he had a bit of a chat and he said something that really resonated with me. Basically said, and this applies to almost all sort of people in this sort of industry, is you're going to have brokers with AI and you're going to have brokers without AI. So you might as well separate yourself from the rest of the pack and use it. And we've definitely integrated in the office. We're currently in the process of integrating it even further, which is really exciting. And we're just fortunate working for Loan Market. They've built a platform, a CRM that is very tech heavy, and they spent a fortune to do it and they got it up and running, but it has shaved. I sort of started when it was still paperwork, and I reckon time on file would have more than halved. Yeah. So it makes a big difference. Then you start reading about, I guess it all depends on what the next step of AI looks like across the globe. I'm starting to get the correct answers using Google Gemini.
Okay.
Stuff that you used to have to delve right into the weeds. You'd have to log into CBA, go into the credit policy, really read into it, and then cross-check with a BDM. And if you Googled it, you just wouldn't get an answer. Yeah. I've got quite a few accurate answers now with Gemini, which is good, but also scary.
Yeah.
But yeah, I just keep going back to, it's such a big financial decision. I could be wrong, but I can't see people ever wanting to just not use a human to do that.
Yeah.
Because as I said, you're going to have a human that uses AI and one that doesn't.
Yeah, correct. I remember when I worked at the bank, when we had people that were leaving, like there are people that you want to leave and people that you want to keep. The people that you want to keep are the ones you're happy to support to leave. And the reminder or the rhetoric behind all that was, or if there was any doubt about how they're going to go when they leave, there's a saying that our boss had, which was, people don't bank with the bank, they bank with the banker. And I think that's the same. Like that's the same in broking, right? As you would have experienced last week when rates went up, your clients called you and said, how does this affect me, right? They're not going to go on ChatGPT, or they might just to get a sense check of it, and they'll realise pretty quickly, well, Jack knows my circumstance intimately well, he'll tell me. And I think that's still going to be the reality. It's just how easy that then becomes in a couple of years' time to allow and enable that for you. But yeah, people still broker with the broker.
Yeah, and I sort of view brokers as almost a version of AI. Like I know on my parents' personal perspective, they were told they had to sell the family home to buy the next family home in 1999 because they were dealing with, I won't name the bank, a local mobile banker, and he said you have to sell because my dad was self-employed. If he had have used a broker, he could have held on to the family home comfortably because they had no mortgage on it. That would now be worth probably over 2 million. So a broker is like going to AI in that we give you answers for the 75 banks that are on our panel. So we're almost an early version of that, and now we're evolving with it. So if we can work together with AI, it's scary to think of what's possible, I guess.
Totally. People who embrace it, like, technology doesn't dictate people. It's the people that dictate the technology, and that's been constant throughout time. So, good perspective, because you often hear people are more fearful about the change, and they resent it, and then they're the ones that fall behind.
Yeah, I'm sort of mid-30s now, so I'm not really hanging around with the youngest of crowds, but I can confidently say that I don't know anyone that wouldn't want a human interaction when buying their first home or an investment property or their next home. We've got a few young people in the office, 20, 21, 22-year-olds, and they would still be speaking to a human. So I don't know how far off that process is of people wholeheartedly trusting a computer to do that for them.
I hear. All right, then just a few plugs on ALBA, please, if that's all right. So
you text me. What do you want me to say?
the money's on the way, by the way.
I massive advocate. Can
you talk about? You've used a calculator, right?
I have. It's a bit depressing when I look at suburbs that I was looking at like 10 years ago, or the ones that I told my mum to invest in. But I like the opportunity cost, and it's really good to sort of send across to clients that are looking in growth corridors in particular. Every now and then you'll punch in a number and it might be flatlined, or they're looking instantly. But definitely, I love the whole, this is how much it's going to cost you. And as I said, if you add rent on top of that, and you can't really time the market. So
for the user who's staring down the barrel, who's got no idea what this calculator is, how do you explain it in layman's terms for them?
You basically punch in a suburb and it tells you... Does it tell you only past growth or projected growth? Yeah, past growth, but also projected growth. So if you do 3 months, 6 months, basically this is how much the property will increase using the median in that suburb over those months. So can you afford to wait? So if you put in a suburb, we're here around St Kilda's projected over the 9 months based on current data and recent data to go up by $30,000. A buyer's advocate will cost you 10 to 20. You can't afford to wait, I guess.
Nice, awesome, good. And it's also the only one in Australia, and it's free to use.
Very handy.
And naturally the ALBA experience is quite unique, right? So you talked about how mortgage brokers are like the AI, the early version of what AI brings, and whereas ALBA is sort of similar. So in your own words, what's ALBA? Why is it unique? And for those looking out there who are just umming and ahhing on the fence, needing good broker experiences, both finance and ALBA, like, how can that be of value to them?
Yeah, I don't want to get sued, but I always tell people that I can't believe no one thought of the idea sooner. I call you a broker for advocates. So you come to a broker because you want different options and someone to hold your hand through the process. That's exactly what ALBA does. So you put us in touch with the right advocate in the right area that fits your exact brief. So rather than speaking to 5 or 6 advocates on your own, if you're a consumer, which I have had friends do before I met you, they would literally have to Zoom for 45 minutes to an hour. You're trying to sort through the weeds. You don't really know what you don't know what you don't know, basically. Just using ALBA straight away, you're in good hands, and you're going to take all of that out of it. You're going to listen to what the customer wants and then put them in touch with the right buyer's advocate in the right spot. Yeah, I call you a broker for advocates, basically. I hope that's all right.
Yeah, no, it's consistent with my LinkedIn profile, so that's handy. But you talked about that experience to the consumer. But what about as the broker? Because you wake up every day, 55 LinkedIn messages, busting your chops for a referral agreement. You have no idea who they are. So there's probably a service element and opportunity element. So for the brokers who may not have a property partner or unsure about what a good property partner looks like, how would you explain, and what's the advice to them?
No one really wants pre-approvals sitting on their list and reworking it. We're in a unique industry where we do get paid very well, but there are a lot of not wasted hours. But if you have to redo a pre-approval 2 or 3 times, you've now done 2 or 3 times the amount of work for the exact same pay. If you can refer to ALBA straight away, you are just helping clear your cachet of pre-approved clients. And I guess your client is in good hands. It's clearing the book. You're helping your client get to their end goal. You're just helping them do it quicker. Yeah. But with someone that is trusted, that you trust, and the market trusts, I think it's honestly just it's a no-brainer. Yeah. I don't think, it's pretty hard to think of negatives, to be honest.
Yeah, cool. Awesome. All right, well, let's thank Jack for his time. Thank you, Jack.
Thanks, Tom.
Doing a great job.
Thank you.
Depending on the millions of views we get on these reels, we might have to do this again soon.
Absolutely. Thank you.
Thanks, mate.